All right, here we go, John. CPI on a month-over-month basis up 0.3%, which is certainly down from 1.2% last month, but a little bit ahead of the forecast. The less food and energy, the core up 0.6. Now that is an upside miss that is not going to make markets or the Fed happy. 0.4 was the forecast, 0.3 in the prior month. On a year-over-year basis, we're at 8.3%. That comes down from 8.5%, and core is at 6.2%. That comes down from 6.5%. Now the thing to keep in mind is those year-over-year figures are based on a base. The drop is based on a base effect. The fact that inflation was so high in these months last year, it was mechanically going to fall. But the month-over-month numbers come in a little hotter than the Fed expected. Right now, it looks like food was up 0.9%, the 17th consecutive monthly increase. Food at home up 1%, down a little bit from last month, but it is still a significant jump. Energy down 2.7%. People had predicted that. Gasoline down 6.1%. That's in part seasonal adjustment. So it is something that could turn around as we see gasoline prices rise again into the summer. And shelter increased 0.5%, rent up 0.6%. Owner's equivalent rent now 0.5%, and that is not good news. It suggests housing prices still are weighing on the overall index. I'm just looking here very quickly. I'll let you do the markets. I'm looking for the autos. Let me
keep digging, Mike. Yeah. Keep digging. The month-on-month, to see that 0.6, Mike, how surprised are you?
I'm not surprised because some analysts had forecast we might see that because of some statistical quirks in the data that do appear to have shown up. The BLS changed its methodology for estimating new car prices, and just starting this month, and new car prices went up 1.1%. It had been 0.2, 0.3 beforehand, and so we have a big jump in new car prices that is a methodological change and will eventually work its way out of the numbers. Used cars fall again, second month in a row, down 0.4, so not so bad. Airline fares up 18.6%. Well, if you've been in an airport lately, like I have, everybody's flying. So the airlines are making up some ground there. We also saw natural gas up 3.1%. So seasonally adjusted, going the other way from gasoline.
Michael, I'm looking at one of the interior data points you're expert at, and let's say there's 40 lines, folks, of the inflation we're living. I can make a joke about alcoholic beverages, but let's move on from the joke. Apparel up 5.4%. New vehicles, you mentioned, up 13%. Physician services go nowhere. Hospital, I mean, it's a jumble. It's a mix. What do the pros do with a jumble that we see here?
Well, what you're going to be looking at, besides the month-over-month headline change, is the month-over-month changes in core goods that people buy on a regular basis, try to figure out
the Cleveland series or the Dallas series.
Well, you could look at that. Apparel prices down 0.8% on the month-over-month. So maybe that is some deceleration. And that's what you're going to be looking at to see if prices are starting to come down in some key areas. And, of course, nobody expects it to fall off a cliff. This is by the end of the year, they're hoping to get somewhere between 4% and 5%. So we'll see how this continues to play out. Part of this is going to be the supply chain problems. Maybe now we've got clothing in the stores because we didn't have it in the fall.
Mike, you just got finished with hobnobbing with Fed officials, with academics. We're looking at a surprise to the upside. This is not what they want to see. They say they are data dependent. Is this enough data to change views, to get people to actually be more persistent in terms of the pace and the duration of the rate hikes?
No, this isn't going to change anything. This is sort of on point what they expected. It's not what they want, but it is certainly something that they are not going to be surprised about. And some of the things that pushed up prices are things, obviously, the Fed can't do anything about. They're not looking at the year-over-year numbers on the headline. Even that's what Americans are going to look like. That's what's going to be in the headlines in the newspaper. But people are going. The Fed is going to be looking at where the inflationary pressures are coming from, and they'll disregard gasoline and food.